Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So if you remember, last week I started a new series called the Encyclopedia of Chart Patterns, where I'll be explaining all the chart patterns that are in the technical analysis, uh, and break them down in detail and explain the psychology behind the pattern, why a pattern is formed and how to trade them and all of that stuff. And today I'm here with the second part of that video, and today I'm going to be explaining a pattern called cup and handle. I'm sure you must have heard this name, cup and handle. Many people who post chart, who do technical analysis, use this pattern, and I'm sure on social media or maybe on YouTube or somewhere you must have heard this pattern named the cup and handle. In last week's video, I explained a pattern called the horizontal or the rectangle pattern. You can check that video out if you haven't already. Click on the I button on the top right corner of the video, and I'll be pasting the link of that video in the description. So make sure you check it out if you haven't already. So let's get started with today's video. Before that, standard disclaimer: I'm not a SEBI registered analyst. Any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So let's get started with the video. So why call it a cup and a handle? Because if you look at this pattern, it looks like a cup with a handle. If you view it from the side, as you can see here, it looks like a cup with a handle. If you view a cup from the side, so that's why basically that's from it where its name came, that is the cup and a handle. So it is one of the most common chart patterns that usually forms after a steady trend, because it's a trending pattern. It's not a reversal pattern. It's only a continuation pattern. Maybe in some rare cases, in some exceptional cases, it can act as a reversal. Suppose stock is in a downtrend like this and it's forming a bottom like this, a rounding you can call it a rounding bottom, but then again it faces resistance at this and comes down a little bit and then again starts heading higher. So it will form kind of a cup and handle. So you can even call it a reversal, but only in exceptional cases, when stock is in a steady decline and then it forms a base, that is usually called a rounding bottom, but sometimes it can form a cup and a handle. But it's a continuation bullish pattern, and it's a bullish pattern. It is not formed when a stock is in a downtrend. It is only formed when a stock is in a uptrend. Suppose a stock is moving up like this and suddenly it goes down like this and start forming a base formation and then comes here and then again, so that is basically a cup and handle pattern. So there's a one legendary trader, Sir William O'Neill, and he has explained about this pattern in his book called the how to make money in stocks. You should definitely check that book out, where he has explained this pattern and how it works and all that, and I have learned a lot about it from his work. So this pattern can last from about 7 weeks to around 65 weeks, from few days to few months. It can be formed on a daily time frame or a weekly or even a monthly time frame, and even on hourly. Some people believe that it is not formed on any other asset like a currency or a cryptocurrency or any of that, but I don't believe that. It is a chart pattern, and any asset that can be drawn on chart, this pattern can be formed on that chart. So it lasts from 7 weeks to around 65 weeks, and the usual correction from the pointed faces resistance to the base formation is from 12 to 15% to maximum of 33 to around 35%. uh, and preferably stock should be above its 200 moving average when the this pattern is forming. Otherwise the chances of failures are really high. So what does a cup and handle tells you? So what is a cup and handle tells you? As a stock forming this patterns tests old highs. uh, just like I said, after a bear market, when a stock is in uptrend like this, after a bear market and forming a base formation, stock is moving up. So there are many sellers trapped that were trapped during the bear market, who didn't sell their share. So when the stock is trying to move up, it will face resistance at those points where the previous sellers are trapped, because once the price come back to their buy price, they will try to get out of it, because they have already endured a lot of pain. So after as a stock forming this pattern as old highs, it is likely to incur selling pressure. As I said, old sellers are trapped, and when their price comes, they will start selling. And uh, just like it says here, from investor who previously bought at those levels, selling pressure is likely to make price consolidate with a tendency towards a downward trend for a period of a few days to few weeks. So as I said, stock is moving in a uptrend, and suddenly it faces a resistance at some level, because uh, there are sellers trap, and then they start selling, and due to the selling pressure, the stocks comes down. But once the selling pressure gets a little less, uh, and there is not much supply left, and then and there are buyers of that stock, then it will start forming a kind of a bottom, and then it will again try to come up. And then again at that same point, some sellers were left, maybe even the new sellers came that bought at this point when the stock was moving up, and some people bought at this point. And then after that, stock went in a downtrend, and after bottom formation, it's coming back again, and then those the previous trapped sellers are selling at this point. But this time the selling pressure is not that much, that why it doesn't went below as like the previous bottom, and the selling pressure is over quickly, and then buyers overcome, and then it crosses the resistance. So that is the whole crux behind the cup and handle pattern. So generally, cups with longer and more U-shaped bottom like this one, as compared to the V shape. As you can see here, I have pasted two examples. Wait a second, let me remove all these drawings. So yeah, as you can see here, I have pasted two examples of two type of pattern. One is a U shape like this, and one is a V shape like this. So it is preferred that a cup and handle must have this U shape kind of bottom, because it gives enough time for the stock to make a bottom and absorb all the selling. And these V shape patterns are very quick. It goes down quickly and it comes up quickly, so the whole selling pressure is not that absorbed properly, and chances of failure of such patterns are high. That's why it's preferred that cup and a handle should be of U shape, uh, and rather than the V shape. So what are the characteristics of a cup and handle pattern? Whenever you are looking for such pattern, keep these points in your mind, because these are some common points that when a cup and handle is forming, that it will show some uh, these type of characteristics. So the first one, as I said previously, that it's a bullish continuation pattern. So it's not a reversal pattern. Maybe in some exceptional cases it may act as a bottom formation, but it is a continuation pattern, that too only bullish. So the price should be in an uptrend to form this pattern. So the next point is, during the formation of a cup, price should not fall more than 40-50%. Because if a stock is falling 50%, it needs 100% to get back to that level. That is pure maths. So if a stock is falling 40 to 50%, then it is not normal selling, and it is in technical analysis, it is believed that after 30% the bear market starts. If a stock falls more than 30%, it's in a bear phase. So the stock should not fall more than 40 to 50%. But in some exceptional cases, in a strong bull market, some high growth stocks are very volatile, and they may fall even 40, 50, even 60%, then again form a formation and continue their upward journey. Such things happened in the dot-com bubble era, where Amazons and likes of Amazons fell even as close to 90%, and they continued their journey. So ideally for this pattern, a stock price should not fall more than 40-50%, because such setups are usually regarded as weak. One important thing is, you have to combine the price with the volume. So volume should decrease as the price declines. So we are in an uptrend and a stock faces resistance, say at this level, and it starts coming down. So when it's coming down, ideally volume should decrease. Always notice this, volume is really important, and combine it with the price movement. So as the stock is falling down, volume should ideally come down. And during the bottom formation, when the stock is stagnant and it is just trading in a small range, volume should not pick up. There should be a very little volume activity. That is what's ideal for this pattern to succeed. And as the price increases, the volume should increase. So when the price starts moving again, moving up and approaching the resistance, ideally the volume should again starts increasing. So that is what uh, happens in case of this uh, cup and handle pattern. So the next point you should uh, keep in mind is the size of the handle should be less than the size of the cup, and it should be between 12 to 15%. So as I said, it's a cup with a handle. So after stock is let me first remove all the drawings. Yeah, so a stock is in an uptrend and it faces a resistance, and now it's coming down and it forms a rounding bottom kind of formation, and again that point, it again faces a resistance because of the previous trapped sellers, and it again starts coming down. So the criteria is same, the volume should decrease while it's coming down. And one more criteria that is very important, while the formation of this handle, it should not fall as below as this level. Suppose this time the stock went down, say 30%, sorry for my bad drawing, say 30%. So this time, while forming the handle, the stock should not fall more than 12 to 15%. The stock should not fall more than 12 to 15%. So that is the ideal condition for a cup and a handle. And sometimes it can form without even a handle. So that pattern is called a cup without a handle, or a saucer pattern. So sometimes, although it is very prone to failure, but sometimes the momentum is very strong and the sellers are not that strong. So when a stock is in an uptrend and it faces resistance at a level and it comes down, and all the selling is absorbed, and it again starts moving upwards and heading higher, so it may not fall again to make a handle. It sometimes will just form the cup and starts heading higher. Although the probability of such setups is low and they are weaker as compared to these cup with a handle, but this sometimes this formation is formed. I'll show you some examples next. So I hope you all have understood the basic crux of how a cup and handle is formed. Then now I'll tell you how to calculate the target price and how to set the stop loss in this case. So before that, let's take a look at the example. So this is a chart of Larsen and Toubro on it's on daily time frame. As you can see here, the stock was in prior uptrend. It moved from around 1270 to around 1500, and then again it started facing pressure at this selling pressure at this point, as you can see, to get the longer wicks, and it again started coming down. So as I told you, while going up, look at the volume and look at the candle. Oh, very strong up move. Let me remove the drawing to make it clear. Yeah, so uh, it faced pressure at this point, selling pressure at this point, and then coming down, and as you can see here, there were some high volume bars, but usually the volume activity is low. You can see this volume, average volume line, it was kind of declining, and during the uptrend it again started picking up. Look at the green candles, green volume bars, and again it faced resistance at this level. So this is a very perfect example of a cup and handle. As you can see here, I told you about that. uh, I showed you that pictures in the beginning. This one, oh, this is the ideal cup and handle pattern. So this, in this case, as you can see here, really it really looks like that. And as you can see here, after the all the selling was absorbed, look at the breakout and look at the volume. And after that, you can see here the resistance turned support. That is the most basic thing in technical analysis. Support turning into resistance and resistance turning into support. So as you can see here, after that, once it broke out, it again the resistance acted as a support and the price went up. Now let's take another example. It's a very recent example, Gujarat Alkali. So as you can see here, one thing to notice, that it is not necessary the resistance must be horizontal. It can slightly diagonal also. As you can see here, it's kind of a diagonal, it's sloping downwards. And this again formed a really perfect cup and a handle, as you can see here. And once it broke out, look at the volume and look at the candle, because this time also it faced resistance. Look at the this, when it approached the resistance, it had high volume, and when it came down, look at the volume activity. Same here also, look at the volume bars when it was going up. And during the whole bottom formation, let me remove the drawings to make it clear. Yeah, so during this time also, as you can see here, when it was going up, look at the volume candles. And when it was in a bottom formation, look at the volume activity, it almost died. And during the exact bottom, it was negligible, and it again started rising. As you can see here, when the stock went up again faced the resistance at this level, and the volume again declined. And when it started going up, look at the volume, look at the volume bars. Wait a second. Yeah, look at the volume bars when again it started going up. So this is what you have to look for in a cup and a handle pattern. When the stock is forming the base formation and it is coming down, the volume should decrease, and when it is again going up, the volume should increase. So these two are also examples of the cup and handle, ideal cup and handle pattern. Many people believe that the handle is not a round shape, but it is more like this channel, as you can see here. But I have practically seen that it can either be a channel or it can be a complete round. It can be of semicircle shape, as you can see in my previous example. As you can see here, it was of semicircle shape instead of a that declining channel. So many people believe that it should the handle should be the declining channel, but I don't believe in that. It can be a rounding type also, and it can be a small one also, as you can see here, of V shape. Although these are not very ideal, but still it can be of this shape also. Here is another example. As you can see here, a big cup formation and a very small handle. And I have one more. Yeah, so this one is the cup without handle, or the saucer. As you can see here, it again faced resistance, but it gave a breakout very next day and started its upward journey instead of coming down and forming a handle. So this time, so sometimes stock will just form the cup or the base formation, or you can call it a saucer, or a cup without a handle, and continue its journey. Here's Here is another example of Max Hospital. As you can see here, it again formed a base formation or the cup, but it did not form the handle, and it started moving upwards. So now let's take a look at few examples and calculate how to calculate the target. So let's start with this one. uh, so as I said, it can be on daily chart or on weekly chart. As you can see here, this is the chart of Borosil Limited, and as you can see here, it is formed on the weekly chart. It's on the weekly chart. It's not compulsory. It could be on weekly chart also, it could be on daily chart and hourly chart, or maybe on monthly chart. So it's not compulsory to be it should be on daily chart. And so Some people believe that. I saw a video on YouTube where the guy was telling that it only forms on the monthly or weekly chart. It does not form on daily or hourly chart, but I have seen it has formed on daily and hourly chart also. So as you can see here, the price after a decent run up, as you can see here, from around 135 rupees to around 254 rupees, almost a 100% gain. Wait a second. Yeah, after almost a 100% gain, it retraced and came back around 38%. Although I said that ideally it should be between the range of 15 to 30 to 33%, but sometimes stocks can fall more and again come back, as you can see here. And look at what the volume did. Volume started declining, as you can see here. When the stock was in uptrend, as you can see here, the volume was climbing up. Look at the focus on this. Let me zoom in a bit. As you can see here, look at the volume here and look at the uptrend. And after that, when this price fell, look at the volume. What happened with the volume? It also started declining with the price. And then again, stock again faced resistance at this level, as you can see here, and then again started declining. And look what happened, what the volume did. When it was going up, the volume went up, and when it was in the bottom formation phase, the volume again went down. So as I said previously, the handle should not go below the cup, as you can see here the case is in this case, and it declined only 22% as compared to the 38% during the decline of the cup formation. Handle did not decline that much. We have another example. Let's take a look at the Reliance. As you can see here, it is also on a weekly chart. As you can see here, it also clearly formed a cup and a handle pattern. The it checks all the criterias. It was in uptrend, although it started declining a little bit earlier, but as you can see here, it formed a clean formation here. It declined from its high around 16%. It only declined 16%, and during the handle formation it only declined wait a second, it only declined around 11%. And after that, once it broke out, it continued its journey. So how to calculate the target, that is really important. So to calculate the target of a cup and handle, simply just connect the wait a second, simply just connect the highest and the lowest point of the cup formation. As you can see here, this was the highest point, that was around 2337, and this was a lowest point during the cup formation, that is around 15.91% and 335 points. So to calculate the target, uh, from the resistance level to the on the upside, from the resistance level to the upside, that is around 15 point, we can take few points up and down. So this is how you calculate the target. Vertical height of the cup formation on the upper side of the resistance, that is your target price. So that is what this cup and handle is all about, the psychology behind it, and how the target is calculated, and things to remember when looking for this target. So that was it for today's video. I hope you learned something, and if you learned something, please consider hitting the like button, and don't forget to share and subscribe to my channel. And I'll paste the link of that video of the previous video part 1, that is horizontal and rectangle pattern, in the description. Goodbye, take care.